5 days from now, at 8:30 in the morning, a single number drops. No warning, no buildup, just a number on a screen. And then every market on the planet moves at once. CPI day is not like other trading days. It is the one morning of the month where the rules change, the volatility spikes, and traders who aren't prepared get run over before the first hour is done. May CPI drops June 10th. Here's exactly why it moves everything, and what to watch. The Bureau of Labor Statistics releases the Consumer Price Index at 8:30 a.m. Eastern. That's it. One report, one moment. But here's what happens in the next 60 seconds. Bond traders reprice the entire yield curve. Equity futures gap up or down. The dollar moves. Gold moves. Oil moves. Every single asset class reacts simultaneously to one data point. Because CPI is the number that determines what the Fed does next, and what the Fed does next determines the price of money for every asset on the planet. That's why CPI day moves everything. It's not about inflation being good or bad, it's about what inflation means for rates, and what rates mean for every trade you're holding. The hot trade right now is betting on what the Fed does at their June 17th meeting, just 7 days after the CPI drops. That's the tightest Fed to CPI window we've had in years. 8 days between the data and the decision. Every trading desk in the world is watching the same number. April CPI came in at 3.8%, the highest reading since May 2023. That number was driven almost entirely by energy. Here's the backdrop. The US-Iran conflict disrupted the Strait of Hormuz. Crude oil is now 62% higher than it was at the start of 2026. Gasoline is up 28% year over year. Fuel oil is up 54%. And the Producer Price Index, which leads CPI by a few months, came in at 6% annualized in April. The energy shock is not over. The nowcast models from the Cleveland Fed are pointing higher for May CPI. The market is already pricing in at least one rate hike before the end of the year. If May CPI comes in hot, above 3.8, the rate hike probability doesn't just stay elevated, it accelerates, and the repricing that follows hits everything. Here's the playbook. How each major asset class typically moves on a hot CPI print. Equities. Growth stocks and tech names get hit hardest. High multiples can't survive higher discount rates. If CPI surprises to the upside, expect a gap down in QQQ at open. AI names, semiconductors, anything rate sensitive. Bonds, yield spike. The 2-year Treasury moves fastest because it's most sensitive to near-term Fed expectations. Watch the 2-year. It tells you exactly what the bond market thinks the Fed is going to do. The dollar. Hot CPI is dollar bullish. Stronger inflation expectations mean higher rates, and higher rates attract foreign capital. The DXY typically rallies on a hot print, which then pressures commodities priced in dollars. Gold. This one is nuanced. Normally, higher rates are a headwind for gold because gold carries no yield. But we're in a stagflation-adjacent environment. Iran conflict, oil shock, slowing consumer spending. If stagflation risk rises, gold gets a bid even with higher rates. Watch whether gold sells off on the print or holds. That tells you which narrative the market is pricing. VIX. Right now, it's at 16. That's below the long-term average. That's complacency heading into one of the highest risk CPI releases in months. A hot print could spike VIX fast. Cheap protection right now. You don't need to trade the number. Most retail traders who try to front-run CPI get chopped up in the volatility. What you need is a framework. Before 8:30, reduce size. Cut your exposure before the print. Let the market react first. At 8:30, watch, don't trade. The first 5 minutes after a CPI print are noise. Algos are fighting each other. Wait for the initial move to exhaust itself. After the first 15 minutes, look for the fade or the continuation. If the market gaps down hard on hot CPI, watch whether it holds the gap or starts to recover. The direction it takes after that first 15-minute flush is usually the direction for the rest of the day. Key levels to watch on June 10th: the 2-year Treasury yield, DXY, and QQQ pre-market futures. Those three will tell you the story before the cash market even opens. May CPI, June 10th, 8:30 a.m. Eastern. One number, every market moves. Now you know why, and you know what to watch when it happens. June 17th, Fed meeting follows 7 days later. If the print is hot, the rate hike trade accelerates. If it cools, the market gets a relief rally. Either way, the next 2 weeks are one of the highest information windows of the year. Watch the 2-year yield, watch the dollar, watch gold's reaction, and watch whether VIX stays calm or wakes up. If this is the kind of market breakdown you want every week, subscribe. New analysis every week. No fluff, just the levels and the logic that matter. Educational content only. Not investment advice. Trading involves risk. Do your own research before making any decisions. See you on June 10th.